Welcome back. So, in today's lecture, we will do working capital turnover ratio. As we have started turnover ratios, they are also known as activities ratio, and in that part, three ratios we have covered. They are stock turnover ratios, debtors turnover ratios, creditors turnover ratio, or we can say trade payables turnover ratio, trade receivable turnover ratio, and inventory turnover ratio. Now, in this lecture, in this video, we will do working capital turnover ratio. Now, first of all, I want to tell you what is the meaning of working capital. Working capital is the difference between current assets and current liabilities. It means working capital turnover ratio shows the relationship between revenue from operation upon working capital. It is also calculated in terms of times. As you know that all the activities are calculated in terms of times. So how can we calculate revenue from operation? There are different formulas for it. Revenue from operation is equal to net sales, or we can say cost of goods sold plus gross profit, or we can say cost of goods sold minus gross loss, or we can also say opening stock plus purchases plus direct expenses minus closing stock. Or more formula can be there. They are purchases plus direct expenses plus change in inventory. As we know that change in inventory means opening stock minus closing stock. Clear? So, if in question revenue from operation is not given and there is no source to calculate cost of revenue from operation, then we can take COGS is as revenue from operation. Working capital, I have told the formula, current assets minus current liabilities. Clear? Now we have to do practical problem related to this topic, and the question is on your screen. Now in this question we have working capital 2,50,000, cost of goods sold 10 lakh, gross profit on sales 20%. Now this is some tricky question. I want to solve this question so that you can also know how to treat on the points which are given like this: on sales, on cost. First of all, we have to write the formula. Working capital turnover ratio is equal to revenue from operation, or we can say net sales upon working capital. Now how can we calculate revenue from operation? For calculating revenue from operation, we have cost of goods sold. The formula is cost of goods sold plus GP. Now GP is on sales is given 20%. Let sales is 100. GP is 20%, means 20% of 100. It comes to rupees 20. It means cost of goods sold 100 minus 20, it comes to 80. Now we can put the amount in statement. If COGS is 80, then sales is 100. Clear? If it is 1, then sales is 100 upon 80. And if COGS is given, that is 10 lakh. If COGS is 10 lakh, then the sales will be 100 upon 80 multiplied by 10 lakh. 1, 2, 5, 1, 2, 3. It comes to rupees 1, 2, 5, 12 lakh 50,000. And working capital is given to you. Now we can calculate working capital turnover ratio. Revenue from operation is 12 lakh 50,000 and working capital is given 2 lakh 50,000. It comes to 5 times. Higher the ratio, which shows the efficiency of the business organization. Means higher the ratio shows the effective performance of the management. So I think this concept is clear, and we will start new ratios, that are profitability ratios, in our next video. Till then, be safe and don't forget to like and subscribe this channel. Thank you.